I spent 6 months analyzing 100 millionaire investment portfolios, and what I found completely shattered everything I thought I knew about building wealth. Pattern number 4 is going to shock you. 87% of them did this, and almost nobody talks about it. Hi, I'm Sarah Mitchell, and today I'm pulling back the curtain on the exact strategies that separate millionaires from everyone else. Stay until the end because pattern number 7 could save you decades of mistakes. Now, before we dive in, let me tell you how I got access to this data. As a certified financial planner for over 12 years, I've worked with high net worth clients, and I partnered with 3 wealth management firms to anonymously analyze portfolios ranging from $1 million to $50 million. These aren't internet gurus or crypto bros. These are real people who built sustainable wealth over 10 to 30 years. And the patterns I discovered. They're repeatable, they're accessible, and most importantly, they go against conventional wisdom. Pattern number 1, they're not as diversified as you think. This one shocked me. We're always told to diversify, diversify, diversify. But here's the truth, 73% of the millionaires I studied had 60% or more of their wealth concentrated in just 2 to 3 asset classes. The most common, their own business or real estate combined with index funds. Not 20 different stocks, not complex options strategies. They went deep, not wide. One example, Michael, a 52-year-old entrepreneur. 70% of his $8 million net worth is in his e-commerce business and the commercial property he owns. Only 30% is in traditional investments. The lesson, get rich through concentration, stay rich through diversification. But you need that concentration phase first. Pattern number 2, the 50-30-20 rule doesn't apply to them. You know the famous budgeting rule, 50% needs, 30% wants, 20% savings. Well, millionaires flipped this completely. On average, they were investing 40 to 60% of their income during their wealth-building years. Yes, you heard that right, 60%. But here's the key, they didn't start there. Most began at 20%, then increased by 5% every year. Sarah Chen, a software engineer I interviewed, started investing 20% of her $75,000 salary at age 26. By 35, she was investing 55% of her now $180,000 income. Her net worth at 42, $3.2 million. The secret isn't just earning more, it's systematically investing more as you earn more. Pattern number 3, they're obsessed with taxes and you should be too. Here's a stat that blew my mind. The average millionaire in my study saved between $15,000 and $75,000 annually through strategic tax planning. That's not tax evasion, that's smart tax optimization. They max out retirement accounts of 401(k) IRAs, HSAs. They use tax loss harvesting. They structure their businesses as S-corp or LLCs. They invest in real estate for depreciation benefits. One millionaire, James, told me, it's not about how much you make, it's about how much you keep. He saved $43,000 last year alone just by having a good CPA and understanding the tax code. If you're not thinking about taxes, you're leaving massive amounts of money on the table. Pattern number 4, their investments are boring, and that's exactly why they work. This is the one that surprised me most. 87%, that's 87% of millionaires had the majority of their stock portfolio in low-cost index funds. Not individual stocks, not options, not the latest hot IPO. Index funds, the average holding period, 12 years. They bought and held through 2008, through 2020, through every market crash. Jennifer, who built a $4.5 million portfolio, told me, I bought the S&P 500 index fund every month for 20 years. I didn't check it, I didn't time it, I just kept buying. Sounds simple, right? That's because it is. The finance industry complicates things because simplicity doesn't make them money, but boring consistently beats exciting when it comes to building wealth. Pattern number 5, they had an average of 3.5 income streams. Not side hustles, income streams, there's a difference. A side hustle is trading time for money. An income stream works without you or with minimal input. The most common combination I saw, W-2 job or business plus rental income plus dividend income plus one wildcard that could be royalties, a small online business, consulting fees, whatever. Marcus, a 47-year-old with $6 million net worth, has his marketing agency, 2 rental properties, dividend stocks, and he licenses a course he created 5 years ago. That course makes him $30,000 a year on autopilot. Here's the strategy, build one stream until it's stable, then build the next. Don't try to do everything at once. Most started with just their job, got that rental property, then added investments. It took years, not months. Pattern number 6, they resisted lifestyle inflation like their wealth depended on it because it did. Here's the pattern: when their income doubled, their spending increased by only 20 to 30%. The rest, invested. I interviewed David, who went from making $65,000 to $240,000 over 10 years. His housing cost went from $1,400 to $2,200. His car kept the same paid-off Toyota for 8 years. He told me, my co-workers who made the same money as me bought bigger houses, luxury cars, expensive vacations. I looked boring. But now I have $2.8 million and they're still living paycheck to paycheck on $250,000. The millionaire mindset isn't about deprivation, it's about intentional spending. They bought quality, not luxury. They prioritized freedom over status, and that made all the difference. Pattern number 7, they invested in their financial education constantly. This is the pattern that could change everything for you. The average millionaire I studied spent 5 to 10 hours per month learning about finance, investing, and business. They read books, took courses, hired coaches, attended seminars. But here's what's crucial: they implemented what they learned. Rachel told me she spent $15,000 on real estate education before buying her first property. That property is now worth $800,000 and generates $3,500 monthly. She said, "Best $15,000 I ever spent. People spend that on a wedding or a car but won't invest it in education that could make them millions." The millionaire formula isn't complicated. Learn, implement, adjust, repeat. They didn't wait until they felt ready. They started, they made mistakes, they learned, and they kept going. Let's recap these 7 patterns that separate millionaires from everyone else. Number 1, they concentrated wealth in 2-3 asset classes during the building phase. Number 2, they invested 40-60% of their income, increasing gradually over time. Number 3, they obsessed over tax optimization and saved tens of thousands annually. Number 4, they used boring index funds and held for decades. Number 5, they built multiple income streams systematically, one at a time. Number 6, they resisted lifestyle inflation and invested the difference. Number 7, they never stopped learning and always implemented what they learned. Now here's my question for you. Which pattern are you going to implement first? Comment below and let me know. And if you found this valuable, I've created a free downloadable PDF that breaks down exactly how to implement each of these 7 patterns step by step. Link is in the description. Remember, these millionaires weren't special. They didn't have secret information. They just followed proven patterns consistently over time. And now you know those patterns too. The question is, what are you going to do with this information? I'm Sarah Mitchell, and I'll see you in the next video where we'll dive deep into pattern number 3, the exact tax strategies that could save you $20,000 or more this year. Subscribe so you don't miss it.